Hey, what's up guys? John here. Black Friday sales topped a whopping $9 billion for a record. However, there's something huge happening in the background that no one's talking about. And in this video, I'm going to walk you through this huge curveball that's going to be coming to the entire banking industry and the US economy. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on. Take a look at this. Black Friday online sales top $9 billion in a new record. Holiday shoppers are spending more on credit cards just as interest rates top 30-year highs. And to put that into context, right now 63% of all Americans are paycheck to paycheck. So we're at 30-year highs on credit card interest rates. And we're stepping into this uncertain economic environment. What we're starting to see here is a lot of people taking on these great discounts for Black Friday, and ultimately what's really going to happen is people are just going to be accumulating big credit card balances, and as we enter the holidays, what's ultimately going to happen is those balances are going to get even bigger and bigger and bigger. And then come New Year, what's going to ultimately happen is we're going to start seeing banks tighten up dramatically on lending standards where people aren't going to have the ability to actually get up from underneath this. And this isn't a theory. They've already announced this. Take a look at what's happening. Despite sky-high interest rates, Americans are charging record amounts to their credit cards as holiday shopping season heats up, risking hefty fees and credit card score fallouts. For personal finance, experts say can be mitigated with little planning, right? And that's ultimately what's going to happen, I believe, is we're going to start to see credit scores plummet nationwide. And the reason for that is, one main reason is people are going to start defaulting on payments, such as automobile payments, credit card payments. They're going to start to do this not out of choice, but simply they're not going to have an option as the cost of servicing this debt gets overwhelming. And now what I believe is very likely going to happen is credit scores are going to start falling. And as that begins to occur, it's going to really impact one's ability to get access to new lines of credit to service existing lines of debt. Inflation, which was running at 7.7% in October, shows some signs of slowing, but still hovers around historic highs. And by the way, if you need help fixing your credit, we'd love to help you at greatcreditfast.com. That's greatcreditfast.com, or call us at 561-430-5900. And while 37% of American households say their finances are worse now than last year, 74% plan on spending at least as much this holiday season, about $1,455 per consumer, according to a survey by consulting firm Deloitte. But respondents estimate that the same budget would cover only about 9 gifts this year, down from 16 from last year. Consumers are going to find ways to combat the challenges, they say, says Rob Sides, global leader of Deloitte Insights. For example, households may cut back on holiday decorations at home to leave more budget for gifts. Some retailers have said consumers are holiday shopping earlier than usual in search of deals. As the season progresses, many American spending will pile onto credit card balances already at a record $866 billion. There's been some estimates that number's in excess of $1 trillion. In the third quarter, 19% higher than the same period last year, according to credit card reporting agencies TransUnion. In some cases, cash-strapped households are leaning on credit to pay for pricier necessities like winter utility bills. Speaking of winter utility bills, there's 20 million American household families that are behind on their utility bills. Now, here's what I believe is very likely going to happen. I believe what we're going to start to see is the dominoes begin to fall. We have 52% of all employers in America, large and small, considering and currently working on layoffs. So 52%, it's a pretty big number. Amazon just laid off 10,000. We're starting to see a lot of layoffs begin to occur. Now, we look at this, we have record high inflation, we have the layoffs that are occurring, we have over a third of small American businesses did not pay rent in full in October, and 46% of the U.S. population works for these small businesses. Now, what I believe is very likely going to happen is I believe we're going to start to see a tsunami of defaults. That's what I believe is going to happen. And I think because of that, banks are going to start protecting themselves. And this is what I believe, this is what they're saying is going to happen. This is what I believe is going to happen. It says U.S. banks tighten lending standards, raising risk of recession. The proposition of U.S. banks tightening terms of loans for medium and large businesses and for commercial real estate rose last quarter to levels usually seen during recessions, according to a Fed survey of lending officers released earlier this month. Lending standards for credit cards and other consumer loans also became more restrictive as the Fed raised interest rates and the economic outlook darkened. Banks tighten lending standards to prepare for an even bigger pullback. Banks are tightening underwriting standards on all manner of loans. They expect to do this so even more in the case of a recession. Lenders made it harder in the third quarter for both consumers and businesses to access credit, according to the Federal Reserve survey of bank senior loan officers released this week. If the U.S. economy falls into recession, more than 80% of banks said they would somewhat or substantially tighten lending standards for credit cards and loans backed by commercial real estate. More than 70% of banks said they would do the same for auto, commercial, industrial, real estate, and real estate loans. So 80% of banks. So here's my advice. This is what I believe everyone should be doing right now. So I believe everyone should be looking at the interest rates that they're paying on their credit cards. I believe everyone should be looking at every single dollar that they spend and really ask themselves, am I putting myself in a better or worse situation by spending this dollar? If the answer is a worse situation, or maybe it's for leisure, for enjoyment, I personally think that this is the time to start really buckling down, paying down high interest credit cards and consumer rate debt. And I also believe this is the best time to really look at ways in which you can open up your opportunities as this economy starts to turn. That could be forming new banking relationships, applying for new credit cards, getting lines of credit, not using these lines of credit, but obtaining these lines of credit. And then you could simply make small payments or small charges, pay them off, start establishing new banking relationships. And why this is going to matter is if 80% of banks are going to start tightening up, and 70% are going to be doing that along auto, commercial, industrial, and real estate loans, the more relationships you have, the better. The better credit score you have, the more people are going to want to lend you money. And the reason for that is that banks and all lending institutions will look at your credit as a gauge of risk that they have with doing business with you. If you have bad credit, you're going to pay an arm and a leg for interest. And that I kind of predicted this 6 months, 12 months ago, saying that what's ultimately going to happen is we're going to start to move in this direction in the economy. That's why I signed a lease in South Florida. I hired a team of credit repair experts in my office, and we're helping a lot of people fix their credit. Simply because this is what's ultimately going to happen, is we're going to start to see credit scores plummet. Over 105 million Americans right now have a credit score below 700. You look at what the CEO of Bank of America said when they were looking at the averages on credit scores for auto loans, home equity lines of credit, and for refinances and home loan purchases. They were all north of 760, and that was an average, some of which were 798 as an average. And so what I think is going to happen is if your credit is not A+, you're not going to be able to invest when the recession happens. You're not going to be able to go out there and really take advantage of this opportunity. I mean, before, you could have a 600, 650 credit score. You go out there and buy a house, and there'd be plenty of lenders that would love to do business with you. But now I believe that game is over, and I think that we're going to be stepping into very, very, very uncertain times. What do you think about this entire situation? It's fascinating to me that Black Friday, people run out there, they're told to run out there and take advantage of the deals. But if something's $1,000 and it's 50% off, it's still $500, right? You're still spending $500. You're not gaining $500, you're spending $500. And so make sure, and this is my opinion, make sure that the money you spend is going to enhance your life and make you, stronger to move forward and to advance, whether you're investing in your education or whatever you're investing in. Make sure it's going to be something that's going to make your life better and do something that's going to really supply value for yourself and your family. I believe uncertain times are coming, and the smart and savvy investors, they're getting prepared for this. They're getting everything in line. They're really paying attention to every single dollar that they're spending, and they're looking for ways in which they can, grow over the next 1 to 2 to 3 years and not be held back, because we're going to start to see a lot of people get held back as the bank vaults start to shut and people can't get access to lines of credit simply because no lender is going to want to issue them loans. What do you think about it? Drop below, hit the like button, subscribe here, and we would love to help you fix your credit at greatcreditfast.com. Call us today at 561-430-5900 for a free consultation. That's 561-430-5900. And subscribe on LinkedIn, Twitter, Instagram, and TikTok for short form content. This is it's such an incredible period. What's happening right now is such an incredible time to be alive. But the reality is, it seems like a lot of people still think that, we're going to be going back to 2018, 2019, the economy is going to go back. Things are only going to get harder. That's my belief. I've always said that I think 2020, 2022 is going to be harder than 2021, and 2023 is going to be harder than 2022. 2024 is going to be harder than 2023. And so you kind of got to train, almost train like you're entering a marathon. That's what I believe, and that's how I'm preparing for myself and my family going forward. I think there's going to be huge opportunities for the smart and savvy that are really, really paying close attention to all the writing that's on the wall. Look overseas, it's pretty clear. Even look at China right now. It's pretty clear problems are coming. All right, catch you guys in the next video.